Hello, hello there. This is Edmund Shing from BCS Asset Management. This week, the 13th of February, we are going to look at the boom in the European economy and the European stock market. Here on page 2 we can see a graph. The black line here is the economic surprise index for the Eurozone. On the left hand scale you can see since October 2014 it's gone from very negative -50 reading to today very positive, a +31 reading. So we're seeing strong economic momentum in the Eurozone, and this of course is in part led by the weaker euro. This yellow line as it goes up is an inverted line, and what it means is the yellow line goes up, the euro is getting weaker. So what this shows you is that a weaker euro helps the European economy. Hardly surprising. Here on page 3 we can see the positive surprise in the German GDP growth level. So look at the German economy. In the fourth quarter of 2014 it has registered 0.7% growth quarter on quarter. So that is compared to the third quarter. Very strong growth ahead of consensus forecasts. This is led by this black line, which is the IFO Business Confidence Survey reading. Again, you can see over the last part of 2014 and into January 2015 it continues to bounce, again suggesting that exports are growing and that German businesses are becoming more confident. So we should see even better German growth momentum in the next 3 months. Page 4 shows the difference in valuation now. The yellow line here is the forward PE ratio for the S&P 500, which is now at 17.5 times. For the DAX, you can see that it has not gone up. It has been flat over the last year and is still only 14 times. So you have 3.5 points of difference in the PE, showing that Germany and German equities are cheap relative to the S&P 500. On page 5 we can see as well that German equities, again shown this time the dividend yield in black at 2.9%, is very attractive relative to German bonds. Here on yellow you have the German 20-year bond yield, which has fallen to a new all-time low of 0.7%. So German equities are attractive relative to US equities, but also attractive relative to German bonds. One excellent way to play this, if you look at the black line, you can see the German DAX index hitting a new, this is in fact a new all-time high of above 11,000, but I've rebased this chart. The yellow line is the HEWG ETF in America, which allows you to buy the MSCI Germany index but hedged into dollars, so you don't take the risk of a weaker euro. This to me is an excellent solution for a dollar-based investor wanting to buy into the economic success of Germany. That's it. This is Edmund Shing from BCS saying thank you for listening and goodbye.